Time for the market report, still trending down.
That's right, Mike, but it's only a slow burn. We'll get into the reasons why. But first, the numbers. We'll take a look at last week's biggest gains and losses. And then in our row report, we look into ongoing drought and a lower Mississippi River. And finally, what's moving the cattle markets right now. So, markets closed last week, still trending down, but that's not necessarily a bad thing. Some commodities still pretty high in price overall. Let's take a look. Last week's biggest gain, wheat up 23 3/4 cents. That's a near 5% rise from the previous week and a slight rebound from falling prices over the last month. Last week's biggest loss, lumber, down $8 over a 1.5% drop from the previous week. This week in our row report, we take a look at the ongoing drought and how it has or has not affected row crops this year. We already know hay prices up in the livestock sector, but in row crops, things are actually looking pretty good. One of the reasons prices haven't risen a lot. I spoke with MSU Extension row crop economist Will Maples to see how things are faring in Mississippi and beyond. Okay, Will, so how has the ongoing drought affected grain prices in Mississippi and the U.S.?
Yes, so the ongoing drought has been an issue. We really saw it back in the summertime when we were trying to figure out what yields were going to be. And we saw prices ride up in July higher. It's looking like it's going to be a little bit better year than we initially thought back in the middle of when the drought was really hitting hard back in the summertime. So prices have come down a little bit, but it's still providing quite a good support to the market overall.
Well, with that ongoing drought, we also have lower levels of the Mississippi River. How's that affected crops in the state?
Yeah, so that's one thing. So we've had a pretty good drought here in Mississippi, but our yields are so far looking pretty decent. But the overall drought in the Midwest is still impacting us from those lower river levels. The main thing that's doing is, all their elevators on the river that rely on barge freight, those freight prices are going up. They're not able to run as many barges in a group, and they're having to not load as much grain on them to keep them shallow. And what that's doing is the basis farmers are getting over on the river has just plummeted. So we saw the same thing happen last year, and we're starting to see the same thing develop this year. And with those lower basis levels, what that means is producers aren't getting paid as much as they would have in a normal year without the low river levels.
All right, well, speaking of exports, though, we know that Mexico recently bought or purchased a lot of grain for the United States, corn to be exact. And how's that going to affect corn prices going forward?
Yes, so they came in a couple weeks ago and bought the third largest on record corn purchase from the U.S. And this was kind of a surprise to the market because we are still in the middle of a trade negotiations dispute with Mexico. They're pretty soon plan to stop importing all non-GMO corn. Importing GMO corn for human consumption into Mexico. So seeing this large purchase right now, it's kind of been it's a positive to the market because exports are not going in as fast as we'd hoped to Mexico. There's a lot of uncertainty. So it's really one of two things. It's either they're trying to buy up a lot of corn before that ban goes into effect, or hopefully what we want to see is that it means they still want to buy U.S. corn, and going forward that will provide support to our prices.
As a matter of fact, we did cover that story on Farmweek recently about Mexico's upcoming ban on all GMO corn for human consumption.
Yep.
They're still allowing it for animal consumption. So I suppose the proper assumption there is that all U.S. corn, once this ban goes into effect, that they import is going straight to the animals to grow them. Is that right?
Yes, that should be the assumption. If that ban goes into effect, it is only for human consumption, and our corn will continue to feed their very large and growing livestock feeding industry they have started to develop.
Moving on to cattle, prices still high despite them slowly falling. Analyst Sue Martin says, right now things look stable because of the season, but as we get past fall, there's another factor at play that could see prices rise once again.
I will have to say I'm still bullish cattle, but for now, okay, it's interest rates, the hikes, so that started to affect buying feeders. It's more costly, of course. The other thing is that you have all this talk about, okay, like the stock market's had a tough week or so, and so there's an old saying, as go the stock market, so goes cattle. And you have a lot of competitive meats out there, the poultry industry, the pork. And so that's, I think, right now trying to play a little bit of havoc on us. But seasonality, you normally will take feeder cattle and set them back into October. Some years we've even made it into November. But I think around October 14th, somewhere in there, we're going to try to stick a low. And what might happen is we may have seen a low today or very close to it, and then start to chop around and meander. But ultimately, I believe this market's going much higher. We have yet to go through what is called the whiplash effect in cattle. And that's when you start seeing a holdback of heifers for breeding purposes. And so then that tightens supplies even further.
And that's it for a deeper look into the markets. Harvest close to done and yields looking better than anticipated. Prices still on the higher end, though. We'll see how it develops.